Hey guys, Bix Weir, roadtoruta.com. Here with Ken Swartz of Purple Power, C60 Purple Power. C60 Purple Power. Ken, it's been a while. I know you're looking at the same stuff I'm looking at as far as banks collapsing, things like that. But I would like to tell everybody there's a new URL link. Is that what you call it?
Yeah, I guess so.
For to get your C60. If you go to, let me share the page here. Okay. If you go to roadtoruta.com and you click up on the right, on the left side, it says affiliates. And you click on Purple Power C60. Right here, you can get the link to the site to get your Purple Power C60 and get 10% off with the Road to Ruta code. So all you got to do is click on that. And then on checkout, I think it has the code. Look, 10% off your next purchase. What I'm loving these days, here it is. Where's the products?
Oh, product reviews.
Oh,
I think scroll it up. There it is. Yeah.
right here. The
Oh,
gummies.
the gummies. Yeah.
The sugar-free gummies. I'm like,
well, yeah, they're screaming good.
they are good.
The only one problem is just hard to eat just one.
Well,
Or even
yeah,
two.
you gotta maintain with your C60. Now, C60, if you take a little more than a tablespoon, or it's no problem, right? I mean, I've taken a couple monster swigs and had no problem.
Oh no, C60 has no toxicity at any level, really. They gave it, usually it's like 1 milligram per kilogram of body weight, in the science. But they've taken it up to, they look for toxicity up to 1 gram per kilogram of body weight, which is 10,000 times, right? And still no toxicity, because all it does is it really interacts with the superoxide, the most damaging oxidative radical in the body, and the hydroxyl ion, the second most damaging oxidative radical in the body. And that's it. Those are the only two things it reacts with. It doesn't react with medicines or nutrients or anything, nothing at all. And other than those two, and since those body doesn't use those two as signaling molecules, like it does with nitrogen oxide. Nitrogen oxide is an oxidative radical, but that dilates and contracts your capillaries. Really important, guys. You don't want to mess with that. So C60 doesn't mess with that, or hydrogen peroxide, or other body signaling molecules. So it's the only antioxidant that can actually increase athletic performance.
Hey, if you guys want more information on the C60 page that we have out there, let's get on that again. Let's go back to Road to Ruta. We have some great interviews on everything that C60 does, and conspiracy interviews, by the way.
Yes.
Stuff we can't talk about on YouTube. But Ken has been giving us full rundown of what C60 is, how it'll help you, help your health, help flush out your system of crap. Let's just leave it at that. It's an antioxidant, flushes out your system of the crap. And so go check that out. Check out those videos and you'll learn everything about C60. We also love to talk about banks.
Oh, yeah. And one other thing, if I could mention it.
Oh, yeah, please.
There's a website called whatisc60.org. We and a couple other good C60 companies sponsor it. And it has like all the human and animal studies, and it's got little synopsis, so you can learn about it, and a couple of industry hit pieces. Because, if anything works, the industry is going to say bad things about it. But but that's so you can learn, really. That's because we can't, on our site, we can post human studies, but you can't post animal studies because that would be making a claim. It's just go to whatisc60.org, and that'll have all the information you need on C60.
Have you done any OpenAI Chat GPT inquiries about C60?
Yeah, we have, and
it is. I mean, I'll tell you right now, it is a leftist sounding board. I've typed stuff in there like on socialism. Socialism is a much better system than capitalism. Yeah. All this crap. I'm like, this isn't artificial learning. It's programmed more fake news, if you ask me.
Oh, yeah, that is. And because obviously it proves it's not an AI, because if it was really intelligent, it obviously wouldn't be that way. Anyway, it would reject its creator's controller. So, yeah, we know that's not intelligent if it says things like that.
Well, yeah. So, okay, let's go to banks. Give me your take. I've been talking about it for a couple of weeks now. My take is the system falling apart. No bank can withstand a bank run because of fractional reserve banking. question is which banks are going to get the run. And one of my questions to you is, in the first round of bank failures, there was 2 of them, Signature and SVB, they bailed out uninsured depositors, but they said they'd never do it again. Is it even possible to not do it again? Because clearly every single bank that goes down is going to be a systemic risk if they don't bail out the uninsured depositors.
Well, they did that. They did with Silvergate too.
Yep.
And actually what they did when they first did that, the FDIC, I guess, announced that they're going to cover those ones that are covered, and that you'd have to wait for your other deposits, right? So they didn't initially do the uncovered deposits, but then over the weekend, because that was announced on a Friday, right? Over the weekend, all the power structures, because that was like, the favorite Oprah had like 400 million in there, that bank, right? And all these other super powerful bunch of Israeli firms and stuff, the control firms in the United States, they have their money in there. And all of a sudden, come Monday morning, oh, we're going to bail out everything. And so, because it's a systemically valuable bank.
Yeah.
Right.
For the deep
Whereas
state.
your bank, and the thing is, they can't bail. Well, they could technically, they could actually bail out everything, and just by creating money out of thin air, because they could just press a button and create as much money out of thin air as they can. There's consequences.
That's the Fed. The Fed can do that.
Yeah, the Fed can do
Treasury, theoretically, the Treasury can't. They have to go to Congress.
Yeah.
And Congress has to approve. But the Fed can say everything's systemic. And then what happens? It's like Greenspan said, we'll never default on the debt because the Fed has the ability to create as much money as they need.
Oh yeah, well, Germany had enough money.
The question is, what will that
Republic? Yeah, they created Zimbabwe could create as much money as it wants.
Yep.
Just because you have that power doesn't mean it's powerful.
So do you think? I mean, when I look at it, if the Fed says, okay, we're going to cover $11 trillion or whatever the nut is of uninsured, that tells me that the purchasing power of the U.S. dollar would instantly go into Zimbabwe type of money.
Oh yeah, that would be a necessary thing. But of course, now we're also having another problem that's happened in the Great Depression, and that is the actual money supply is shrinking. And that's because, if people may know, the money supply is actually created both by the Federal Reserve and by fractional reserve banking, right? And so the banks are not loaning money, because when you put money into it, they're buying treasuries. They're not loaning out money to people. So the actual money that's out there is actually shrinking. And that's just a sign that the banks aren't lending.
Great. Your screen's for, there, you're back.
Yeah, I don't know what's that. Yeah.
Yeah, they're putting it, as far as I can tell, all the money's going into the reverse repos, but I think that's from the money market funds going into. Now, those are not FDIC insured, by the way. Now, whether or not I want to see Janet Yellen get to that point again, where they either have to decide to bail out unsecured depositors, because she said last time this is the only time, or not. And if she doesn't, I want to see what the reaction of the people is.
Well, yeah, it's systemically important or not. It means, are you politically favored or not? That's all it is. It's just a meaning of political favor. But people, I guess we probably should talk a little bit about the history of where this all came from, because this didn't happen. We had a thing back, the Great Depression, right? And if that happened, and there was results of that. Like one thing, for instance, what we have now, what we didn't have before, is interstate banking. There used to be intrastate banking. That means banks could only bank within the state. And that was back in the interstate banking federal law since 1927, right? That was in 1927, we had that. And then after the Great Depression came, they had a bunch of hearings in the government, and they had this law called Glass-Steagall, and the act. And what it was is they separated commercial banks. Now, commercial banks are the ones you put deposits in, the ones that give loans to businesses or mortgages or stuff.
Regular banking.
The regular banking, and that's the one they protected. Then there's investment bank, which are really just speculative banks, and they can act as brokers. They can buy stocks, securities, bonds, derivatives. They can do all this stuff, and they weren't covered. You're speculating. You're quoting investment. You're speculating, so we're not going to cover that. Well, the problem is that all changed. First off, the first one that went away is the Regal-Neal Interstate Banking and Branching Efficiency Act of 1994. And that was signed by Clinton into law, and that got rid of intrastate banking. and now banks can bank in different states. And the reason that they didn't allow that is because the last time they did that, they had problems in the Great Depression. That was one of those
Surprise.
things. But that wasn't the worst. And then in 1999, Clinton signed the Graham-Leach Bailey Act, and that basically got rid of Glass-Steagall. So now, because the investment and speculative banks, they wanted to get into that commercial zone and start grabbing it, like Chase Manhattan, JP Morgan. They wanted that hunk of money, and they were prevented from doing that. So they just paid off their congressman, and they got these laws passed. Clinton signed it, and that's when things went bad. And of course, that kind of rapid speculation directly led to the bank crisis of 2007, 2008.
I think also 99 was the year that the big fight between Sheila Bair of the CFTC and Greenspan and Robert Rubin about whether or not derivatives should be regulated.
Oh,
and that's the year that they decided not to regulate derivatives, creating this massive derivative bubble, which also contributed. And it was the banks dealing in all those derivatives. You look at the derivative market right now, Goldman Sachs just eclipsed JP Morgan at 50 trillion. Jamie Dimon lost his number one standing he's had for more than a decade as the number one derivative holder.
Well, yeah, I was looking at I went down to get the figures. And the closest ones I got the ones that I got this is from I guess December of last year. So it's still 5 months, but it's close. That they had that Goldman Sachs had $53 trillion in derivatives. JP Morgan had $50 trillion in derivatives. Citibank had $47 trillion in derivatives. Bank of America had only $19 trillion in derivatives.
Oh, they must be fine.
Oh, and Wells Fargo only had $12 trillion, well, almost $13 trillion in derivatives. And people should know that these 5 banks are actually the ones that own the Federal Reserve, along probably with the Bank of Rothschilds in London. We don't know who owns the Federal Reserve. The Federal Reserve is not federal; it's a private corporation. It has stock. Somebody owns it. We've never, in the history since 1913, known who actually owns the Federal Reserve. That's never been disclosed. And the Federal Reserve is what really controls the U.S. government. And so that's what people, and then we don't, and so they, because whoever pays the piper sets the tune.
I would say on that list of 5, if you look at that chart, it's interesting that the banks actually have a decent amount of reserves, the market cap or whatever they call it. I think reserves. JP Morgan's got over 3 trillion in assets.
Yeah.
Goldman Sachs does not, though. Goldman Sachs has they pay out all their money to their partners, so they don't have many assets.
Oh yeah, and I mean, see, this is what's been happening. What we had the Silvergate go out on the 8th, then we had SUB go out on the 10th, Signature Bank went out on the 12th, and then just this month we had it was First Republic Bank, JP Morgan. And what's happening too is when these banks are taken over by another bank like JP Morgan, they get all the juicy stuff, and they leave the crap, like the commercial real estate loan portfolio ends up on the taxpayers' back. So you're basically the taxpayers taking all the losses.
An interesting thing about that, first of all, Signature and what was the first bank that went down? The
Silvergate.
Silvergate. Those are both crypto banks. Huge into crypto, tether money, supposedly. How much fraud was going on there, and those were bailed out.
Yeah, that's what that they also they think Silvergate basically it's from the FTX stuff. That FTX thing that was the thing that started it, and then all this other stuff started. It slides downhill, and so that's what these guys started going out.
So the ownership of the Fed, there's a conspiracy that came out about that, a conspiracy theory. When Trump was in office, all the Trump lovers are going, and the Q lovers are going, hey, Trump is taking over the Fed. Trump is taking over the Fed, because they changed the Federal Reserve domain from federalreserve.org to federalreserve.gov. And that was the big conspiracy. I mean, that is hardly proof. Who
No.
knows? It might be. If they did take over ownership, that would be an interesting deal, because what does the Federal Reserve have? It has the ability to create money out of thin air.
Yeah, but the leadership's the same gang of crooks.
True.
Well, so how could they? Yeah, I doubt that, because why do they have the same gang of crooks running it?
I agree, and that's the only
over.
proof. That's the only proof they had is the
Yeah,
.org to .gov. So I haven't seen any evidence. I would love it to be true, but do you really want the Federal Reserve as part of your country? I'd go the other way. Let's leave all the debt to the Federal Reserve notes to the debtor, the Federal Reserve. Let's give them all that crap and go back to gold and silver.
Well, there's a whole set of banks they think that are going to go next.
Oh yeah,
this is like the beginning of the domino thing, and I just thought I did a little research. So if you got money in these banks, you probably want to get it out. Pacific Western Bank, that's in LA. They got Western Alliance in Arizona. They got these might not be systemically important, by the way. Commercia in Dallas, Zions Bank Corporation, Salt Lake City, Republic First Bank Corp in Philadelphia, and Home Street in Seattle. That's what the analysis of looking at it, because what it is a lot of these banks, like if you're at a credit union or a small bank, most of the depositors don't have more than $250,000 in the bank, right? In any credit union. So those are supposedly covered by the FDIC.
But the FDIC doesn't have the money.
Yeah, exactly. And that's the truth. But but they can create money out of thin air. But the other thing, what we're talking about is
not the FDIC. The Fed
yeah. But the other thing is the banks, what we're talking about, these are actually big banks, because I think the First Republic Bank was like the 12th biggest bank in the country.
Silicon Valley Bank was number 18.
Huge. Yeah, exactly. And so what's happening is because a lot of the companies and stuff have more than $250,000 in it, or rich people have more than $250,000. They're all saying, are you systemically important? And they don't know. Well, they know, for instance, the top 5 banks that I just mentioned before, like Goldman Sachs, JP Morgan, Citibank, Bank of America, Wells Fargo, that actually own and run the Federal Reserve secretly behind the scenes. They are systemically important banks. And so all the rich, powerful money is heading for those big 5 banks, because they know if anybody's going to be covered, it's going to be them. But the question,
even though those banks have the massive derivative books.
Exactly. But there is a thing called reality, and it's entirely possible that if there's a derivatives crisis. I mean, look what happened when we had what was the Swiss bank, Credit Suisse took over UBS, and the reason they did that is a forced marriage, because they had such a huge derivatives exposure in UBS. If that unwound, the whole system could have come apart. So they just basically shotgun marriage those two together just to hold the derivative system. And if the derivatives went bad, we would have a resulting chain of collapse, that it doesn't matter how systemically important you are, it all comes down. It's like a giant house of cards, and they can.
Yeah. In 2008, we were half an hour away from that. As Senator Ken Jaworski said, it was September 11th, 2008, when everybody was pulling money out of the money market funds. He said we had a half an hour to make a decision. We decided to open the Fed window and just flood the system with money. We were literally a half an hour from everything shutting down. Will they do that again is the question.
Oh, you could guarantee they will flood it, but will that work?
But will it? Yeah, will it work? Will it be enough if the derivative situation does collapse? Because I think the problem back then, it took $800 billion bailout, and then the banks levered that up to about $20 trillion to bail themselves out.
Are we about to say stuff that could get us in trouble?
No, not yet.
Not yet. Okay, cool.
We'll get to that in a second.
Making sure we're not going to go there, because they're pretty touchy. You had to redo that one video so they'd let you go.
Okay, ladies and gentlemen, we will be taking we're going to end it right there on the YouTube channel. Thank you for talking about rainbows and flowers and everything wonderful. Make sure you go to roadtoruta.com affiliates, Purple Power C60. Get your C60. What's the direct website?
Shopc60.com.
Shopc60.com. Get 10% off using the Road to Ruta discount code, and then get that the gummies, the sugar-free gummies, or if you like sugar, get the sugar gummies. And get yourself healthy for this transition. Ken Swartz, thank you, and we'll see you on the private road.